It was an ex-crypto trader from the UK that found Forex and prop firms and has now been funded $1.3 million in trading capital. Jason Anderson is a dad from Utah that found prop firms and has been funded $1 million worth of trading capital. And Dr. Carlton is a retired Georgian eye doctor that got involved with Forex trading, has now been funded $20 million worth of trading capital and received the largest payout that we've ever seen of $1,080,000. So the big question is, what the heck are these guys doing differently, especially considering the fact that only 6% of people that sign up to take a prop firm challenge actually pass and become funded traders. And yet there's guys like these three or plenty of other guys that you probably hear the stories of on YouTube that are getting funded millions of dollars worth of trading capital. So I went out on a journey to interview these guys and talk to a bunch of other people that had been funded $1 million worth of trading capital to see what it was that they did differently. And in this video, I break down the controversial blueprint that these guys are using to poach millions of dollars from prop firms. So based on my interviews and talking to these people, there's really three main things that these guys are doing in order to get funded millions of dollars worth of trading capital. The first thing is that the fact that they actually have an edge. So the first thing is you need an edge. And if you don't have an edge, then the second and third thing that I'm going to share with you that these guys are doing in this video, it doesn't really even matter. The first things first is that you need an edge. Now, these three guys that I shared with you at the beginning of this video, they happen to be a part of our algorithmic trading group, and they use our Titan X robot as their trading system. And the purpose of making this video is not to sell you on trading with Titan X. I'm going to show you 12 different things that can help define your edge that we've learned from data of over 1 million different people that have taken prop firm challenges, and what are the few 12 things that are commonalities amongst the most successful traders. So this was a brilliant article that came out from My Forex Funds, rest in peace. But one of the beautiful things about this was they gave us really interesting data on what are the common factors amongst their most successful traders. And again, they had like over 1 million people sign up for prop firm challenges. And these are the 12 things that these people did. So this can help you define your edge. Now, the reason I'm saying that you should consider this data, especially if you don't have an edge, is because modeling success is the fastest shortcut to success. If somebody is already out there and they're already successful at something that you want to do and you follow exactly what they're doing, then the chance of you becoming successful doing their methodology versus trying to figure it out on your own increases dramatically. So here's the 12 things that they figured out amongst the most successful traders at their prop firm. Number one, they found that Forex traders make more profit when they hold their trades longer than 6 hours. Number two, they found out that there's no long-term profitable trader in the My Forex Funds database that trades news. Not a single one. So don't trade the news. Number three, traders with the highest payouts have the least number of trades on average. So you don't need to make a bunch of trades in order to become profitable. Number four, of the traders who have been paid out over $20,000 during February, only 20% of them didn't use a stop loss. So you should probably use a stop loss. Of that 20% of people that didn't have a stop loss, 95% of them actually closed their trades quickly. Number six, it said that of the 80% who actually had a stop loss, 99% of them actually had trades close in a loss before their stop loss was actually hit. Number seven, they said that users who trade exclusively GBP, JPY tend to give their profits back to the market within 5 trades. Number eight, we learned that the more exotic the pair, the more likely the trader is to lose money. So don't go out there trading those weird ass pairs. Number nine, they found out that losing traders still open trades during the daily changeover. So don't open trades during the daily changeover. Number 10, the most profitable pair on the platform was Euro US dollar. Interesting. The least profitable pairs on the platform were US 30, NAS 100, and JUR 30. So maybe consider not trading indices according to the data here, which I think is pretty statistically significant considering they were one of the largest prop firms, if not the largest prop firm. And number 12, the majority of payouts over $20,000 happened from traders that only traded Forex and metals. So what do we make of this? The most successful guys that are getting funded, they have an edge. Here was 12 common things that they're doing, but bottom line is that you need to find your edge. So you can watch another video on our channel to try and look for a strategy that you like, or you can join our algorithmic trading group at www.propfarming.com if you'd like to trade automatically with the robot that already has an edge that's gotten over 600 people funded. Now, the second thing that I learned from talking to these people that had been funded over $1 million worth of trading capital, and by the way, what we're doing is we're starting a club inside of our community where we're going to be recognizing having a special group of all these people that have been funded over $1 million. So I'll have some of them come on the channel too and share some of their insights. But the second thing that I learned from these people is they start with a small account size, or they start with something relative to their budget. Now, this is really, really important for you guys to get, because you have to understand this. If you go out there and you get really excited that you can get funded $200,000 worth of capital for only $1,000, and you happen to fail this challenge, which the odds say that the chances are you probably will, and then you don't have the money to go out there and buy another $200,000 challenge, and you can only buy a $10,000 challenge, you're gonna have to make an insane amount of money, or a really, really high percentage, in order to actually make the money back that you lost on your $200,000 challenge. So it's really important before you ever start this journey to consider the account size. And I like to say that you should consider a size that is reasonable for you, that you're not going to lose sleep over, that you're not going to feel like a punch in the gut anytime you fail, and also something that you could take every single week. Because later on, I'm going to talk about the strategy of how to build up these accounts to up to $1 million. But what is an account size that you're comfortable taking every week? Here's another rule of thumb that you can use to decide how big of an account should you trade with. One of the common rules that I learned was that if you can't lose 10 at that account size, then it's too big of an account. So let's say $100,000 account costs you $500. If you can't lose 10 or $5,000, then you shouldn't start with that amount. So you should start with a much smaller amount. Now, are we going to lose 10? The chance is probably not, as long as you have some sort of brain on you and you follow some of the steps to find an edge. Then the chance of you failing 10 in a row are pretty low. So this step was actually really, really important, which I didn't think it was, but it is, because a lot of people get knocked out of the prop firm game simply because they start with too high of an account challenge their first time, and then they get knocked out and they never have the ability to build a foundation and actually start multiplying their assets under management. Now, the third thing that I really learned about these guys is that they really understand how to think in terms of probabilities, or how to think like a casino, right? A casino knows that they have about a 5% edge. So for every $1 million that walks through their casino, they know that they're going to make $50,000. And casinos, some days they have losing days, even some weeks they'll have losing weeks, but they don't tell people to not come into their casino. They know that they've rigged the game in their favor. They have a slight edge, and as long as more people start coming through, the law of large numbers is going to play out, and they're going to make their 5%. Now, another thing that I learned about these guys that have gotten funded $1 million worth of capital, they don't actually pass the challenge 100% of the time. You may be thinking that these guys are brilliant traders. You know, they have a really, really high success rate. They get funded $100,000, and that's not necessarily the case. And the beautiful thing about this is that you don't need to pass 100% of the challenges, or even 90, or even 80, or even 70% of the time, in order to make this a really profitable venture and to be able to scale up to $1 million in funded capital. A lot of these guys, they're actually just aiming for like a 50% funded ratio, meaning 1 out of 2 times that they sign up for the challenge, they're going to pass, and 1 out of 2 times they're actually going to fail, and they're okay with those odds. So let's just play a little game here. And this is, I've talked about this previously on my channel, but if you go ahead and say that, hey, I want to flip 100 coins, right? It's going to randomly flip the coins. There, did it really quick. Here, I'll give you a couple seconds there. And let's go ahead and flip these coins there. And let's say that a head makes a win or a pass challenge, and a tails actually means that you failed. You'll see that you'll go on these long winning streaks and long losing streaks, even though you have 50-50 odds. So you can see, just to start, this guy would have lost 3 challenges in a row, which a lot of people, after failing 3 times in a row, they'd give up. Yet when you look at how this actually played out, you can see that it was nearly a 50-50 odds. And if you let this law of large numbers play out to like 1,000 coins, then it's going to get closer and closer to this 50%, or statistically it should. And you can also see here in this random random set, you can see that we would have won 1, 2, 3, 4 in a row. Here we would have won 1, 2, 3, 4, 5 in a row. And again, here you can see that you would have lost 5 in a row. 1, 2, 3, 4, 5. But what I really learned is that the most successful traders that are getting funded, they just need to have a slight edge. And even if they can just get funded 50% of the time, then this is a huge win for them. And I'll explain why in the math behind it in just a second. So it was interesting talking to these guys, and I really learned that they have bulletproof psychology, because there was times that they told me that they had lost 3 and 4 challenges in a row. And so at that point, it's really, really hard to keep trading, especially when you're losing money, which I'm sure you guys are well aware of the feeling. So let's just put these numbers into examples for us. So we have a 50% chance of getting funded. Let's say that we're going for a $100,000 account. It costs us $500 to take the challenge. If we pass 1 out of 2, that means that it'll cost us $1,000 to get a $100,000 trading account. Now, also what I noticed was a common strategy amongst a lot of these guys is they didn't get greedy with the $100,000 account that they got. Most of these guys actually went for a really small profit target on their first $100,000 account, or whatever the account size is. They only went for like a 2% profit target, plus they got the refund. So if you get 2% on 100 grand and you make 80% is your profit split, that's $1,600. Plus you make an extra $500, that makes $2,100 that you're making. So the idea here isn't to think, okay, I've made $2,100, I'm gonna withdraw this money into my bank account and I'm gonna use it to pay for a vacation, or I'm going to pay for rent, or I'm going to pay for whatever. What they all did is they looked at this as a business, and they used this initial account kind of like as this income generation account that's really safe and stable to fund the rest of their challenges. So again, if we just did 2%, we made the $2,100 with the refund. Well, that $2,100 goes out and buys 4 more challenges. So these guys would use the profits from their initial account to not take into their bank account, but actually to buy more accounts. Now, with those 4 more challenges that she bought, let's say that again, you have a 50% pass rate, then that could secure you $200,000 more in extra funding. Plus you have your original 100K, so now you're up to $300,000 in funded accounts. And so what a strategy that these guys seemed to do was to just use this initial feeder account to actually pay for more challenges. And then what they would do is they'd be a little bit more aggressive on the second and third and fourth and fifth accounts that they got. And it seems like on average, they'd go for around like a 4 to 5% profit target, which I think there were statistics from my Forex funds as well, that most of the guys that got payouts actually went for somewhere between like 3 and 5%. And then the game becomes really simple. It's just rinsing, repeating the process and letting the law of large numbers and probabilities work in your favor as long as you have an edge. So if you'd like to see a little bit more about Titan X and the edge that these guys have in our algorithmic trading community, then go ahead and check out this video right here.